In this video, I'll be sharing with you a simple option strategy that has a pretty high win rate, is easy to manage, plus what's nice is that you can still use this strategy even if you have a small account like $10,000 or even $5,000. And best of all, the beauty of this strategy is that it's very flexible and you can easily modify it according to your needs. But before I start, do join my 10,000 members Telegram chat group to discuss stocks, options, and personal finance if you have not done so. Alright, just in case you are curious about what this strategy is, it's called the Jade Lizard, which the profit and loss graph looks a little something like this. What you will notice is that this strategy has 3 different zones. If the stock stays around the middle zone, you will earn the maximum profit. And if the stock goes up further, you will earn a slightly lower profit, but you will still profit nonetheless. You will only lose money if the stock goes below your break-even price. So this strategy is considered a neutral to bullish strategy, where you profit as long as the stock goes sideways or goes up. Now, some of you might notice that this strategy looks a little similar to the cash secured put, where you will also profit as long as the stock goes sideways or goes up. So the question is, why do you even want to complicate things? Why not just stick to the cash secured put, which is a lot simpler to do? Here's why. At the top, I have the cash secured put, and at the bottom, the Jade Lizard. Both of them have the same short put at the $550 strike price, whereas the Jade Lizard has 2 extra option legs, which I'll explain what they are later. What you will notice is that if the stock stays within this zone, the Jade Lizard will give you a much higher profit, which in this case, it is $825 as compared to the cash secured put's $534 max profit. That's reason number 1. Reason number 2, why the Jade Lizard is better is that your break-even is lower. That's because you will receive more credit from both the short put and the short call, which means the stock will have to drop a bit more in order for you to start losing money. In this case, the cash secured put has a break-even of $544, whereas the Jade Lizard break-even is slightly lower at $541. So the Jade Lizard would be a better strategy to use if you are feeling neutral or semi-bullish. Alright, the first step to create this strategy is of course to choose the underlying. This strategy works best on stocks or ETFs that don't move much, while having the ability to go up over time. And the first one that comes to mind would be the SPY. It has a rather low implied volatility, which means there's a higher likelihood of staying within the maximum profit zone. And since it's an ETF, you won't have to worry about earnings or sudden announcements, which could cause the stock to suddenly shoot up or crash down. This is super important, especially if you want consistent profits, since it's been shown that ETFs tend to stay a lot more within the expected move as compared to stocks. The other reason is because the S&P 500 has a strong track record of going up over the long term, which is good because if and when the stock crashes and we end up getting a sign, all we need to do is wait for the stock to go back up. Now, once we have selected the underlying, the next step is to select the days to expiry. And for this, the best DTE to go for would be the 45 DTE. Why? That's because the folks at tastytrade found that for options that are below 45 DTE, the realized move of the stock tends to be bigger than the expected move. For example, maybe the data expected that the stock might move 2.5% in one direction, but in reality, it moved by 3%. Or maybe the data expected that the stock might move 3.5%, but in reality, it moved by 3.8%. So that's bad. That's why if you want a better chance of success, you would go for 45 DTE or more, where the realized move tends to be lower than the expected move. Also, the reason we go for 45 DTE and not more than that is because the 45 DTE gives the highest option decay as compared to longer time periods. Quick pause. Selling options are a great tool to take advantage of market swings, while allowing you to buy or sell the stocks at a price that you want. Moomoo Singapore's new seller dashboard feature lets you efficiently search for option contracts that best meet your criteria. To use it, just head over to Markets, Options, then scroll down till you see the seller dashboard. And here, you'll be able to search for contracts using different filters. Besides that, you are also able to quickly select a combination of option strategy and do a one-click view of the profit and loss chart to easily view your maximum profit and loss. Momo Singapore offers one of the lowest options fees out there. Plus, there's also a current promotion where you get to enjoy a 30-day commission-free trade on options. In Momo Singapore's latest welcome promotion, you will get to earn up to 1,034 SGD worth of welcome rewards. This includes a 6.8% per annum guaranteed returns for up to 30 days on your first 80,000 Singapore dollars invested with Momo Cash Plus. Please note that Momo Cash Plus is an investment product. This is not comparable and is different from savings deposits. Principal is not guaranteed and up to 30 days of 6.8% per annum is guaranteed only during the promotional period. Investment in any capital market products involves risk and the risk to lose principal. Up to 4 stock bundles of the top 5 traded US stocks worth $70 each and an Apple share worth $287, plus up to $20 cash coupon exclusive reward when you sign up using my link. Holding period and buy trades apply. Alright, the next step is to create our short put. For this, we can go with strikes that are around the 16 to 20 delta. But why 16 to 20 delta? Why not 30 delta or even higher? So again, we can look at the studies done by Tasty Trade. What they found was that when you compare between the 16 and 30 delta, 16 delta tend to give you a higher success rate. But then you might say,
but it gives me a lower average profit.
That is fine, because when it comes to selling options, what we want is consistent income. That's why it's always better to choose a lower profit if it means that we can get a higher success rate. But then, why 20 delta? Again, what Tasty Trade found was that the 20 delta tends to give you the highest average return on capital when compared to other deltas. So when you combine both studies, 16 and 20 delta would be the optimum range to sell your short put. Also, for those who do not know, the delta gives us a rough probability of success. So in this case, 16 to 20 delta means that we have about 80 to 84% chance that the option won't go in the money. So let's try selling a put at the 16 delta, and by doing so, we will receive a $300 credit. Now, of course, the short put by itself is the cash secured put. So let's turn this into a Jade Lizard strategy. To do that, all we need to do is add a bear call spread, or what some people call a call credit spread on the other side. For this, there is no hard rule on where you should choose your short call, but people typically choose the short call at around the 30 delta. So let's just do that. Now, the final step is to choose a long call, but where should we do that? Remember that the Jade Lizard shouldn't have any losses when the stock goes up. So to achieve that, the width of the call credit spread needs to be lower than the total credit that we receive from both the short put and the short call. For example, if I choose the $573 long put, you can see that I have no loss on the upside. Why? That's because the width of this call credit spread is $3 wide, which also means that my max loss on it is $300. And since the net credit that I receive from this strategy is $397, it is more than enough to cover the max loss of the call credit spread. So as long as the stock stays within this range, I will earn the maximum profit. But if the stock goes up further, my profit is reduced. This profit is the leftover credit after I've minus the max loss from the call credit spread. So in this case, we take $397 minus $300 to get $97. Now, what's nice about the call credit spread is that it is super flexible. So let's say you are sure that the underlying will not move much. What you can do is move the long call further away. That will give you a higher max profit if it stays within the middle zone. But in return, you will earn less if the stock goes up even further. Or maybe you feel a little more bullish. In that case, you can bring the long call closer so that if the stock goes up further, you will still have a pretty decent profit on the right zone. Now, the one thing you need to be aware of when doing the Jade Lizard is that it's an undefined risk strategy on the downside. In that case, you will need to pay attention to your buying power effect. For example, you can see that in order to put on this trade, I would need to have a buying power of around $13,000. So obviously, if you have a small account size, you won't be able to do this trade. To fix this, you will need to turn this into a risk-defined strategy, which you can do so by adding a long put, effectively turning the cash secured put into a put credit spread. So where should you put your long put? this largely depends on how much you are willing to risk. For example, if you are willing to risk $1,000, the width of the put credit spread should be $10 wide. So $527 minus $10, you choose $517. And tada! You can see that your buying power is now a lot smaller at $1,097. But now we have a problem, because since the total credit that we receive have been reduced, our upside now has losses. So to fix that, we will need to reduce the width of the core credit spread. So that the net credit that I receive from this strategy is more than enough to cover the max loss of the core credit spread. Fun fact, this strategy is called the Iron Condor, where you have a put credit spread on one side and a call credit spread on the other side. Now, let's say you have an even smaller account, and maybe you can only raise $600 instead of $1,000. So what can you do? Again, you can start by reducing the put credit spread width to $6 wide. And similarly, you will end up with losses to the upside. But now, the problem is you are unable to reduce the width of the call credit spread anymore, since it's already at $1 wide. So what can you do? Two things. The first thing you can do is to bring the call credit spread closer to at the money, because the closer you are to at the money, the more credit you will receive. In this case, you will get $109 credits, which is enough to cover the $100 max loss. So if the stock enters the right zone, you will still get $9 credits. Or if you think the stock might go up, you might not want to shift the position of the call credit spread. In that case, you can shift the position of the put credit spread upwards instead. And in this case, you will get $114 max credits. Next, here are a few tips on how you can improve your probability of profit even further. 1. Since the Jade Lizard strategy works best in a neutral to semi-bullish environment, you want to enter this strategy when you know that the stock has a high chance of going up. The best way to do that is to only enter the strategy when the underlying is oversold. To check this, you can check the RSI indicator. If the RSI line is below the 30 level, this means it is now oversold, and there's a high chance that the stock will rebound upwards. For example, here, you can see that whenever the RSI line touches 30, the stock has rebounded upwards. 2. Try to sell below the support level. So in TradingView, what you can do is search for the support and resistance levels with breaks indicator, and boom, it will now show you all the levels that you can place your trades. Okay, right now the SPY is nearing the overbought level, but let's just imagine that it's now oversold and you want to place a trade. Where should you place your short put? The nearest support and resistance level is around $524. So what we can do is sell our short put at $520, which by the way, just happens to be at the 16 delta. So this strategy will give you an 84% success rate. Or another way is to look at the dynamic support and resistance levels, which you can do so by bringing up the simple averages 50, 100 and 200 indicator, and you can then place your short put at these levels accordingly. So as you can see, this strategy is pretty flexible, where you can adjust it depending on your view on the market and risk tolerance. Now, let's talk about when you should exit your position. So what Tasty Trade found was that if you close at 50% profits, this will give you the highest win rate, as well as the highest return on capital. But then sometimes I have people coming up to me and say,
"Hey, I'm already in a winning position. Why can't I just hold all the way to expiration to earn the remaining premiums?"
Here's why. As long as you hold your position, there's always a chance that the trade goes against you. In this case, Tasty Trade found that if you hold to expiration, your win rate drops from 93% down to 85%, and you will end up with a much lower annualized return on capital. So never ever hold your trades all the way to expiration. But then there are times where you are unable to get 50% winner rates. In that case, you should just close your position at 21 TTE. This includes whether you are in profits or in a loss. As long as it's 21 TTE, you just close your position. The reason you want to do that is because you want to limit your losses so that there's no chance to lose even more. For example, this is the usual P&L graph that you see for Jade Lizard, or rather the Iron Condor. However, this is only if you hold all the way to expiration. But if I pull the time slider to earlier TTEs, like 21 TTE, what you will notice is that your losses will be much lower. And the more the time passes, the closer you'll get to your max P&L. So by closing your trades early, you will reduce your potential losses. The other reason you want to close your trade early is because you want to avoid early assignments. That's because the closer you get to expiry, the higher the chance of getting assigned. Here's the chart form of this, which shows you that as long as you stick to the strategy where you consistently close at 50% profit and 21 TTE, you will be able to profit over the long term. But then, here's another question. What should you do if the stock goes against you and maybe the short put is now in the money? As mentioned earlier, you can wait for the 21 TTE, close the trade and take the loss. But if you want to take this one step further, you can do this. According to Tasty Trade, if you're above the 21 TTE and the short put is tested, what you can do is roll down the call spread. This will increase your credit a little bit more, which can help to cushion the downside a little more. The reason you don't want to roll your short put yet is because if you follow the only open when oversold rule and sell below the support and resistance rule, there's still a chance for the stock to rebound back up and you'll be in the green again. Otherwise, if you are below 21 TTE, you can roll the whole trade down and out, which is similar to what I've said just now. Basically, you close your current trade at a loss, then open another new trade at a further expiration date to cover your loss. So that was the Jade Lizard options strategy. Hopefully you found this useful. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.